So it's Friday, November 13th. Time is 6:18. So let me pull up on the daily chart. So this was last week's. We were looking for the break on 297 for it to be bullish. We kind of tapped it. We didn't break it and just rejected really well. So that was last week's review. And even last Friday, I was saying that, the market could, it wasn't such in the middle. It was this last Friday was the 6th. It was right here. We were like so tapping the top, and it looked like it wanted to go, but it also looked like it wanted to go down. And then we had this crazy great news about Pfizer coming out this week with trial 3 of their vaccine, and they said there was a 90% success rate. So the market rejoiced, and it went back up. It climbed really well. It gapped up to like crazy highs on Monday, and then it just sold off on everybody. But that's nothing new because so I was looking at my notebook, so I'm pulling some dates, and we had that Russian vaccine also as well, and that happened on Russian vaccine news happened on August 11th. And so August 11th, same thing. We kind of, sold off. We kind of gapped up, sold off, up and down, and just chopped for a few days. We chopped for like almost a whole week, 5-6 days before going back down a little bit more, and then climbing up further to a whole new time high. But this time we were kind of already kind of at that new all-time high already. We had another new high here. So I think the same scenario is gonna apply if we can break above and close above for the day, then the next day, it'll be an opportunity, and you can long it from there. If we close above this line here for SPY, it looks like we can. It looks like this can cross back up, and if we gain more momentum, it could keep running. But there's a few catalysts that they were looking at. One of the catalysts is that Trump kind of kicked the beast nest a little bit. He mentioned yesterday that he was going to ban the China investment, prevent the American investors from investing in these China stocks. But he had talked about listed stocks, but it was just talking about it, and just kind of doing that in fate could kind of cause the market to drop. And on top of that, we only seen the reaction from Trump, right? We haven't seen the reaction from the other side. So something could happen from the other side too, and that could also cause a drop as well. And then we're also getting, new all-time highs on COVID cases per day. We got 160 cases per day today, which is very high. But some of us could be like, could say, some of us could be saying, oh, who cares? COVID has been going on. They have a vaccine already. It is what it is, and we have grown so used to this COVID news that's been happening for so many months that we have gone numb to it. But keep in mind, the same thing happened, early on as well. That COVID news that we thought we grew numb to, that didn't affect the market, that happened in February as well. We knew COVID was a thing. We knew COVID was gonna be crazy, especially if you play the game Plague Inc. You know how the transmission rate was and how it was gonna spread worldwide. We knew about that, and the market kept climbing and climbing, and then out of nowhere it finally dropped. You know, so I so what I'm saying is just don't be, you know, it's good to be overly cautious at times like this because we don't really know what's gonna happen. Because if they do a round two of the shutdown, it could be really bad. And if the market drops, it will definitely be a buying opportunity. And then when they announce the second stimulus, that'll be the time to start buying it up. That'll be when you know when to buy. But it's uh it's also very hard to short the market. So I kind of switched my strategy this year. I only go long on the market majority of the time because we have so much stimulus going on. We have so much quantitative easing. The Fed is literally propping the market up. So you're more likely to win if you were to go long than you to go short because there are less day of drops than more day of the drop. So that's why I switched the strategy up as well to adjust for the market. So that's on the daily chart. It looks like a crossover. We haven't lost the momentum yet that I thought we would. The money flow is still green. So usually when that's green, it's like people are still buying it up. So the momentum is still there. Ideally, I was really looking for the dollar index to go down a little bit more because dollar, if the dollar index goes down, the market will go up, and if the dollar index goes up, the market will go down. The only thing that's really interesting here is XOF. Almost every stock, all the big stock has recovered back to this pre-COVID level. And for the financial sector, that would be $31. But the financial sector is still in the middle right now. There's only a few sectors that hasn't recovered, and that's the financial sector, some of the consumer discretionary, and also the oil sector. So I'm gonna dig a little bit more into the sectors or into the charts. So that line was kind of like the double top line, and we looked like we broke it up. We broke through it, but it was just a fake out, just to hustle everybody, making everybody think we were bullish, but we weren't. And again, we're testing it again today, so we kind of just tapped it again. Usually, the more time we touch it, the more likely we're able to break through. But we haven't broke through for the day yet, so it's gonna be iffy. And then the last 2 days we've just been chopping. Usually when it chops, that means we got a big move coming. Just a matter of time. So this line is the top from all the way from pre-COVID. So as I mentioned before, the only sector that hasn't recovered that was the banks. So most of the indices hasn't really shown us any signals. It looks like it's gonna reject. That's what I'm seeing. It looks like it could reject because it's having a hard time tapping it. And then the other interesting thing was crude, which is oil. And oil actually recovered pretty good, as I expected to, because we knew there was a hurricane going on, and it had shut down the Gulf of Mexico's refineries last week. So we knew that was gonna be bullish for oil anytime that happens. But on the chart here, it has some sell volumes today. It just crossed over. It looks like it can go back down. Usually, you can use this as an early indicator as well for the market. If the oil goes back down, the market generally goes back down. We see some recovery in gold as well. So it looks like people could possibly be hedging. This is the only thing I see as a buying opportunity right now, as far as investing for long term or just a good hedge, because at the end of the day, when they release the second stimulus, I think gold is gonna go up overall regardless, because it's gonna create inflation. More inflation is good for like the for metals like gold and stuff, gold, silver, and everything else. We also see some movement in bond as well. Bonds started moving up, so that means people are starting to hedge as TOT move up. But the market didn't even drop that much yet. We're getting a doji in FXI, which is index of some of the large caps for the China ETF. So that was kind of interesting. So a lot of these FANG stocks, they're kind of close to the. They look like they're about to do the W, because that's what happened on SPY or ES. So we kind of had this double bottom, and it just kind of went back up, touched the top. Usually when double bottom patterns happen, it'll create a bull flag. It'll touch the top, pull back a little bit, then go up further, and then come back and then go up even further. That's how the double bottom patterns usually play out. But it looks like it hasn't really played out on some of these big tech yet. And if it does, it would lead the market. It would definitely lead the market a lot more. If it doesn't and break under, we have a total collapse. So it's hard to say. We got some conflicting stuff fundamentally, in terms of COVID and the China investment, and then Trump's also trying to do a week count also. And if that goes any further, and they keep they keep talking about this week count, and he challenges the presidency and stuff, or maybe stage a coup or something, that could really wreck the market too, because it's people aren't gonna be expecting that. They're not gonna know how to expect that, so they could also sell off. So the best thing to do right now would just be, to kind of be careful, just hedge properly if you could, and remain cash in case something big does happen. Because if it drops, you're gonna get hurt a lot. But if it doesn't drop and keep running, you'd be good. You can always get in because it's just chopping right now. That's how a lot of people got burned. A lot of people bought in on this big volume, and we didn't move anywhere for the last few days. So premium just got burned. So that's why it's good to be on the sidelines when you're not sure, because as you can see, people aren't sure where the market is going. That's why it chops. But that's pretty much it for the day. We're looking at some ERs for next week, which is Walmart and Smile Direct. I think those is gonna be interesting stuff. I'd love to see how Walmart reports, because they're a really solid company, but they're hitting that double top. I think they could hit newer highs, because this week they talked about investing in or they had this new service about pets and things like that. like Walmart pet service. So I thought that was pretty cool. They launched in like new pet care service, and the stock doesn't even move because they're just like a solid blue chip stock, and it generally doesn't pump like that. So I'll be interested to see how the earnings goes. If they drop, I think it's a buying opportunity, regardless. But it'd be pretty interesting to look into for long term, as always. But that's pretty much it for the stock review today. I'm probably gonna end this video here for the YouTube version, which is 6:33. And then let me come back. Let me relog back on.